A couple guys have been asking me to do a video on what I think about certain trades, so I'm just gonna give some information. I want to talk about. I think there's definitely a new bull market in the gold and silver area. I don't think, even though I think the S&P is gonna should be heading down, I don't think it is. The technicals just don't show it, and why I like technicals more than fundamentals. Why I think technicals are probably the only way to do stocks. How I've only been really successful with technicals and not with fundamentals. Okay, right here I have a silver chart um, ending in 2013. This is when I first started looking at precious metals. At this time, silver had a massive run up from about 2000 to 2011, gained about 900%, and then it pulled back quite a bit. And at this time, a lot of investors, especially gold and silver investors like Peter Schiff, were saying, due to quantitative easing, I think this was either QE2 or QE3 in 2013, and because of that, the deplete or the surplus of dollar supply, that silver and gold were just, they'd pulled back here. They were describing it to the 2008 pullback, and now it was just gonna explode higher, towards 90, $100, and I remember hearing this, and this was the fundamentals for it. Were saying that there were more dollars in the market, so therefore gold and silver would be worth more. But the technicals just didn't show that. So a lot of people thought, buy gold and silver, but I didn't, I didn't believe this. I thought it was in a bubble, and one of the reasons was, I'm gonna pull up the Nasdaq, is that looking at the Nasdaq bubble in the early 2000s, I mean, it's like a match to gold and silver in the 2011 bubble. You had that big run up, the initial drop, the bounces sideways, and then the crash. And if you go back to the silver chart, that's what we had in silver. We had a run up, the back and forth, and then, like I thought, it ended up crashing. So even though the fundamentals showed it should have went higher, my technicals showed that it wasn't going higher. And so that caused the crash down into this bear market that brought it pretty low. I think bottomed out in the 13s or 14s. Now the S&P, some people told me that they think the S&P should be, crashing. The government's printing money, the elections. So we're gonna go to the spider and look at the spider. Even though I feel like the S&P is highly overvalued here, I don't think it's not showing any signs of dropping now. This is a chart from 97. As you can see, the run up in the 90s kept going until it broke that uptrend, came back up, hit the uptrend, and then the bear market started. The bull market in the 2000s, starting 2003, bounced off it, finally broke it, came up, retested that level, bear market. You have the bottom in 2009, retested that upline. It is yet to test that, so we are nowhere near a break yet. If it's just not there. Even though the fundamentals might show that this is an overvalued market, the economy's weak. We're not really creating any jobs. GDP is growing by like 1.5%. Doesn't matter. We haven't broken that line, so we're not going anywhere. And currently, in the S&P, we've had this consolidation. This is Brexit right here. That sell-off came down, hit the 30 level in the strength-wise, and right here we just have some consolidations been going on since early September, and we haven't gone anywhere. As you can see, a cone's forming. So pretty soon this is either going to break north or south, and if it breaks south and it gets into sold territory, then that would be your time to buy. But I definitely wouldn't be thinking this is going into a bear market anytime soon. Okay, so do I think gold's in a new bull market? Yes, I've been telling people this for a while, and a lot of people are pointing to this big drop in the last couple days as a reason that it's not going into that it's re-entering a bear market. But I saw this really coming. I know I told some people that I thought it was gonna sell off. Some of the people who had money in the gold stocks because it started to test this December uptrend line, and once I saw it was breaking through, the weakness was just there. So I knew it was going to come down. But we broke through the 150. We're testing the 250. And a lot of the commentators in the media are pumping this fear that, oh, it's a new bear market. But look at the run up from 2000 to 2011. I mean, we touched that. We broke through the 250 multiple times, and we haven't even done that yet. So I really think that gold is going to come down, consolidate in this area, and then it's going to bounce up, retest the downtrend line from 2011 one time. It's going to come back down, and then it's going to break through, heading to probably 1400 or 1500. The way I usually do this, I don't buy the GLD. It doesn't have enough moves, so I buy the miners. You can either do it with the GDX, which is the large miners, or GDXJ, which is small miners, or what I like to use is JNUG, which is a derivative 3 times bull, and it maximizes your gains or losses for that matter. So this is really what I've been using for quite a long time to play this. I originally saw back in August that it was getting really overbought, so I sold all my positions, and then September 1st it looked very oversold, and I thought this was it. This was going to be down. You can see the relative strength was nearing the 20s. So I bought here, bounced up, failed, came down. I sold out. Didn't make really anything off that, and then I noticed that it was consolidating here, and I realized that this was definitely going to break lower. So it did break lower. Again, we have hit 30. I picked up a bunch of shares under 10. I think that's a pretty good position. I think we're going to consolidate here, and then we are going to head back to the 30 level. One reason I think this is, pull up the GDX. We are in a giant cup and handle formation. You can see one handle here. We are forming a second handle, and this area right here is the cup. So what I did is, in the first handle, the bearish handle, I highlighted the top, the bottom, and the bounce lines. Drew them here. Now watch this. We go over to the bullish handle. Look at that. Same lines. Top, bottom, we've almost hit it, and the retrace line, we've hit all 3 of these. That's not a coincidence. That's pure technicals. It's gonna bounce off this line, and it's gonna head much higher. That is definitely not a coincidence. What this is these lines are where massive amounts of buyers and sellers come into the market or go out of the market. So what you're seeing here is these lines are all being hit exactly in reverse, and once they do, we are going easily over 50. Okay. Why I like technicals instead of fundamentals, like I said before, fundamentals can be great, doesn't matter. Technicals. Alright, look at these lines right here. Drew these lines. This is back in 2008. Okay, you have pretty much the tops. See it bounce off, bounce, bounce, bounce. Follow those lines to present day. Look at that. We are hitting the same lines. The same lines. And what this is this is where money comes in or goes out. That's why it acts like that. When markets bounce up and down, I used to think, well, that was just the way it was. Well, that's just not the way it is. That's because that's money entering and selling on strength. Another line right here. Look at this. 1, 2, 3, 4, 5, 6, 7, 8, and breaks it. That for 8 hits on this line over a 2.5 year period, it held it every time. Okay, there's a reason for that. That's not fundamentals. That's technicals right there. Okay. Um, so again, where do I think gold is going? I think gold is going much higher, and I'll show you why. Okay. What you can't see here is that the 1985 uptrend consolidates at about 1920 or 1220, and again, this is GLD, this isn't gold. So what I'm thinking is it's going to come here and it's going to bounce up. People say, well, it's in a bear market. No, it's not. It's not even close. And I say I'm putting money where my mouth is. So you know, it's going to bounce up. Another reason is we've got our strength broke below the 30. Every other time strength has broke below the 30. Look, here it hits 30. Massive drive up in gold price. Below 30, drive up. Below 30, drive up. Dip down below 30, massive move up. Below 30, move up. Almost touches 30, line up. So what we're doing is we're weeding out all the people who are afraid right now. It's going to consolidate and we are going to see a pop, and a pretty significant one. Okay. Now, some of the other stocks I'm watching Verizon. Verizon is bouncing against resistance. Verizon is also hitting a significantly oversold position. I would say this is a buy in the next day or two. And Walmart. Walmart is coming into oversold. It's got a massive support line that it's bounced off of multiple times. And it's got the uptrend from 2015 all coming about right here. So I'd say when Walmart hits about 68, or it's about 68 right now. No, when it hits about 68, 68.70 now, that's probably a buy, and you're going to see a nice jump from that. And so that's just my thing. But definitely I think gold is a buy. I think that you're going to see maybe some further weakness down to 1220, 1230, and then we are definitely going to see a pop up. And definitely the best way to play that is the JNUG, and it'll give you pretty good returns. So that's where I think we are right now.